And we're back here at Trade Profit Accelerator. This lesson is creating a trade plan, and we are in week 1 planning here. Here's the course map, and this is day 2, creating a trade plan. And we're just gonna jump right into the outline here. So first we're gonna get into a simple trade plan, and we're gonna walk you through that resource that we have, and then we're going to deep dive into the 6 essential parts to a solid trade plan. These are identified in the simple document. We're just going to go a little bit further into each of the things, and then we're going to talk about what to do when the plan isn't working, and we're going to close out by giving you some bonus plans here, and you'll see what those are at the end. Okay, so what this can do for you is it can give you a simple plan to trade, which is super important if you are going to be trading in any market or industry. And it can also help identify important parts of a trade plan for you, as well as what to do to get past setbacks in trading, and it can help you think about the types of plans you need as well. Okay, so let's jump right into it after we cover one more thing here. So plans help lower risk and give insight to potential conflicts of your time, money, and resources, and that's important to cover up front. Okay, so let's get into the simple trade plan intro here. And for this, it's a simple document here that you can just go ahead and click on this link if you have the slides, or if you're near the resources section, it's also in the resources section. So I'm just going to pull it up here, and this is what will come up. So if you enable editing here, it should have more functionality with drop-down menus and things like that, okay? But each of these sections we're actually going to cover right in the course here, so no need to read this right now or anything. We're going to come back to this, and it's an action item actually is to fill out that template at the end of today. But we're just going to talk about the 6 essential parts that you just saw in this trade plan here. So the first part was goals, and we're going to get into that right now. A goal is something you're not sure you can attain. I talked about this a little bit in day 1, and there's a great recording out there by Jim Cathcart called Intelligent Motivation on Audible, and you can listen to that, and it'll give you some inspiration about setting goals. But a goal, it's only a goal if you don't know how to get there yet. If the goal isn't bigger than you are, it's not going to expand your life. And that's why your goal always has to be bigger than you. It should be worthy of a celebration after you achieve it. And if it's something you can do or you know how to do already, it's not a goal. It's an obvious milestone. If you will spend just 1 hour a day studying your field of expertise, you can become a national expert in 5 years. And there's all sorts of goals that you can make. The most common are financial, but you shouldn't be limited to that. You can be subscriber-based, token-based, engagement-based, client-based, any of those things as well. And so here are the key metrics that we track for trading. This is where you're going to see in the simple trade plan is return on investment and win rate per trade, right? If you make 10 trades, how many trades are you expecting to win or to make money on? And then your reward to risk ratio is when you average out every gaining trade or every winning trade, and you put that over the average amount of every losing trade, and you'll get your reward to risk ratio. And then the last thing is average hold times. If you show me these four numbers and you have a decent amount of data to back it up, like 100 trades or something, then that's pretty reliable. I would feel comfortable expecting the same numbers that you have. Okay. And then your goals would be an improvement of your existing numbers, right? So that's it for goals. Now let's get into position sizing. So up front, position sizing is how much you risk in each position. And this is going to be dependent on your goals and expectations, the time input you decide on, the risks you're willing to take, things like that. And you really want to think in terms of your overall assets, like a combined value of all of your assets. So you want to pinpoint the largest positions you have and calculate their position size relative to your total position values. Okay. And an example of that would be like if you had a retirement account and you had a trading account and you had equity in your house, right? So maybe your retirement account is 500,000, the equity in your house is 300,000, and you have a trading account that's like 200,000, right? So the equity in your house would be 30% of your total assets, right? So that's a huge portion of your total assets. So things like that. And you really want to focus on the 20% causes that are going to make 80% of the difference. So it was Vilfredo Pareto that observed that 20% of the pea pods in his garden yielded 80% of the peas. Vilfredo also noted that 80% of the wealth in Italy was owned by 20% of the people. And it's often found that 80% of the work is completed by 20% of the workforce. And roughly 80% of the wealth and land in most countries is controlled by 20% of the people. And 80% of the company's revenue comes from 20% of its customers. Zoom in on your positions greater than 2% and ask yourself if the risk is really worth the rewards. Okay, so fortune often favors the bold, but be careful of your largest positions because they could be your Achilles heel. And an example, a recent example of this just showed up on my Instagram feed, is WeWork. A large investor here, Masayoshi Son. It really cost him $11.5 billion and his credibility. Okay, so this was a very well-respected Japanese billionaire, and basically this one company ruined his entire reputation, and you can see it overrode his lieutenant's objections, and he handed the founder of WeWork billions of dollars from SoftBank and other funds. Okay, so really be careful of your largest positions because they could really be your Achilles heel here. And you want to go back to Pareto's principle that roughly 80% of consequences come from 20% of the causes. So that's it for position sizing. Now let's get into position management. And position management is all about setting targets and cutting losses, more so cutting losses and managing your risk in your existing positions. Okay. So back to the WeWork story, if he realized if he was tracking that investment closely and he saw it lost 10% in the first year, he could have cut his losses to less than $1 billion or maybe even a couple hundred million, right? And he would have still had most of his wealth, but he did not do that, and he did not listen to anyone. So that was a big lesson learned there for him. Targets should be driven by your time frames and expectations. And in my opinion, your risk determination should be predetermined based on a lesser percentage amount than your target, or at a bare minimum, the same risk that you're taking is the distance to your target. In no case do you want to risk more than there is reward, and I'll give you an example. Let's say you buy XYZ stock for $100 a share because you think it's going to 120 next month. Your reward is $20 over the initial 100, which is 20%. Therefore, to keep your reward to risk ratio above 1-to-1, your bailout point should be $80 or above, right? Because when you start going below $80, now all of a sudden your risk is more than your reward, right? Does that make sense? Hopefully. And so if your stop point was $90, that would make your reward to risk ratio 2-to-1, right? Because you're only risking $10 for a potential $20. That's assuming you have one share. If it's 100 shares, then you just times everything by 100, right? So that's it for the position management. Now let's get into the trade hours, the actual hours of operation. Ultimately, it needs to work with your schedule, and that's most important. We're going to get into all these hours here right now, but really, it really matters what your schedule is, most importantly. If it can't work for you, then it's just not going to work. So the Forex hours, if you don't know what Forex is, it's for foreign currencies trading, okay? So those hours start on Sunday at 5 p.m. and they go to Friday at 5 p.m. And this is because different markets are open at different times around the world, basically. So crypto is 24/7, 365 days a year, which is kind of cool. The stock market is generally 9:30 a.m. to 4 p.m. Eastern Standard Time, although hours do vary based on holiday schedules. In the stock market, the daily close price are the prices tracked the closest by traders and investors, I would say. And those close prices are set at 4 p.m. when the markets close. Okay, so when you see the line charts on TV and you see the dots from day to day, well, those dots are based on the close prices at the end of the day. Okay, so first hour markets are open is when there's the most volume, just that first hour. So 9:30 a.m. to 10:30 a.m. And I know a lot of day traders that only focus on that first hour of trading, which seems to make a lot of sense to me. So those are the trade hours. Now let's get into the position selection, okay? And this is super important. This is completely up to you. However, I will give you an intro to one technique that we use here right now. Someone else's method is definitely going to be riskier than your own just because you don't have the full understanding of all the principles involved, right? Because you didn't make that strategy, basically. So you should have high confidence that you understand the industry and the market before you actually trade in it. So you definitely do want to practice in demo accounts until you feel comfortable enough to actually risk real money. So the demo account removes all the risk because it's just paper money. It's just fake money in the demo accounts. Okay, so you can open up demo accounts on Forex.com or even in Interactive Brokers, or I don't know if Robinhood has demo accounts, but Interactive Brokers has paper trading, so that's helpful too. And so I'm going to get into our three-step system here, but I did want to caveat that with all that stuff, and then also say that all trading is situational. So some of the examples I pull up here, it's all situational. It changes day to day based on the different opportunities. And I do want to bring a disclaimer here. I am actually going to pull up a disclaimer because we're talking about the financial markets here. Legally want to protect myself because I'm presenting this information in good faith. However, no representation or warranty expressed or implied is made as to completeness or accuracy. Okay, so pause the video, read all this. It's super important stuff. I'm not trying to gloss over it, but obviously I'm not going to read it word for word here. Okay, so I want to do that before I got into this three-step system here. Okay, so there's some YouTube videos embedded in this video, but what I'm actually going to do is go into FinViz itself and actually give you what I look at on the day-to-day. Okay, so screening for opportunities shouldn't take very long. If you purchased the course, then you also get access to our FinViz accounts here with these pre-built screeners, so you wouldn't have to spend any time, money, or resources building these lists. They would all just be kind of there for you at our accounts when you logged in. Okay, so off the bat, if I was day trading, I would probably go to this day trade scan list first, but because the markets are closed and this is kind of all just for educational purposes only, I'm going to go to the swing scan list. This is the primary source for our one trade a week alerts that we send out on Friday. So I literally just go in on Friday afternoon and I hover over all these opportunities. It usually doesn't take that long, but it's gonna take a second here because I'm explaining actually what I do here. And what I do is I hover over these opportunities and I look for the best patterns based on my previous knowledge of trading here. And I'm just going to pull up a few examples here. And so I have 4 examples that I think these charts look pretty good. And I'm going to run through a few of the numbers here. I'm going to get deep dive into all these numbers in later weeks. But some things I look for are the volume numbers, okay, in relation to the shares outstanding. So that's pretty important. I'm going to get into the supply and demand of shares in the market when we get into that later in the course. That comes in week 3, okay? The demand here this day was about 10% of the supply, which is pretty high. And you can see the relative volume's pretty high. So the average volume, the volume today over the average volume will give you the relative volume. And other things are the price per earnings. So we'll deep dive into those numbers later. I'm not going to explain all that right now, but I'm just going to look at the other charts here, okay? So Pubmatic, right off the bat, doesn't look as good as METC because this is not breaking out to all-time highs. But METC is, it's not breaking out to all-time highs, but it's breaking out to monthly highs for sure, unlike PubM. So I'm just going to drag that to the end. Udemy, same. It's not really breaking out to monthly highs yet, but it's an interesting pattern. It seems to be high basing here. And then Rover also looks good. Doesn't have as high relative volume as METC, so and then you look into some of the other numbers, so it did just have an earnings surprise, which is good, but it's got pretty high price to earnings ratio, so you also want to look at that. And not trying to deep dive into that right now, like I'm saying, but these are two good opportunities where I would not feel terrible about risking money. Okay, so going back to the risk management thing. Okay, so if 8 was my entry, and let's say if it fell below 7, it would start to look a little scary, right? So you have $1 of risk, and maybe you would want to set your targets at 9 or higher, right? It seems to make sense. And then Met C is another good opportunity here. It's got big volume, big breakout on big volume. So this is probably the best opportunity that I see in the markets today. Obviously, the markets are closed. It's early in the morning on Veterans Day. So I'm going to say Met C is my choice for today. So that's fine and the best opportunity. It took a little longer than 60 seconds, mainly because I was explaining it. I think I could settle on Met C in about 60 seconds. And then only making the best trade, there's a good video on YouTube here that shows you how to make the best, how to actually make the trade. Okay, so you can watch that on your own time, but if you're watching this course, you probably already know how to make a trade, so it's not new information to you. And then the last thing would be to set the targets and to set the alerts at the stop level. So something cool about FinViz is you can actually set alerts. Okay, so I can add another ticker, and it could be Met C, right? And if I thought it would look scary below 12 or below 14, I could set an alert. I'm actually going to go, see, yesterday's range was so big. It was 12 to 16. You're kind of buying at the high here. So if I was buying in, I might even set a limit order to buy at 13 and watch at the open to see what it does. But for now, I would probably set an alert at 12, because below 12, it just starts to look not as good and not in an uptrend. So the alert would be, and you can check these to get news and ratings and insiders. I usually don't do that. So price above would be 16 and price below would be 12. And then I need to save the changes, and that should be an alert now. I'll get an email when the price breaks 16 or 12. So tomorrow morning, assuming I'll get an alert at 16, because it'll probably open 16 or higher. And if it doesn't, then if it opens at like 1450, I may really be interested at entering a position like this. So that's the short and skinny of the one trade a week strategy. And it really shouldn't take you an enormous amount of time. I do allocate half an hour to run the scans and do analysis before. And that's because I really want to vet these trades that I'm sending alerts out to my subscribers for. Okay, so that's the main reason I give a half an hour. But yeah, it really shouldn't take that long at all. And then the documentation is a super important part of it. And I'm gonna just focus on the documentation of the written plan in this lesson. I'm not discounting the documentation of the actual trade itself. Obviously, you want a trade setup sheet. You want to go through your qualifying checklists, and you want to document the actual trade itself, the entries, the exits, and the stops you're looking for, things like that. We're not going to get into all of the documentation of the actual trade, like what you need for tax purposes at the end of the year. Right now, I'm just talking about the written trade plan, which can be as simple as the one-page trade document in the resources section. Okay, And this is going to help shape your trading and give you guidelines to follow, as well as information to reflect on. This is essential for tracking and learning from your mistakes. And actually documenting the trades is also super important, like I said. However, that's in a separate item that we're going to cover in the week on execution and then the last week in documentation. So we have a whole week on documentation, and you'll need to track your trades for tax purposes, and we'll cover that in week 6, day 4, when we get into the demo of the trade toolkit file. It's just another resource that you'll have at your disposal. I combine all the tools, all the trade tools that we have into an Excel file, and I'll also make that available on a Google Doc too when we get there. Okay, so that's it for the 6 essential parts to a solid trade plan. Now let's get into what to do when the plan isn't working, and this is super important to know as well. It's pretty short, but it's super important. Okay, maybe a lot of you know what to do when the plan isn't working already, but here's what to do when the plan isn't working. So you want to change the plan until it works. I know it sounds super simple, but it's not all that obvious to people sometimes. But yeah, if the plan's not working, then change it, right? So just change the plan until it works. Other options, I tried to brainstorm of other things you could do. I didn't really like what I came up with, to be quite honest. I guess you could wait for market conditions to change, but that's not really going to help you in the moment. You could rethink your situations and strategize specifics, but ultimately those strategy sessions should go back to changing your plan, right? And hopefully that's what you end up doing is changing the plan until it works. So let's just do that. The plan does not need to be sound at first. This is a big misconception that people have about plans. It doesn't need to be sound at first. Any plan is better than no plan. And very often the first plan is not sound. And you will need to change it for various reasons that become apparent when you start doing it. You're probably not going to know what's wrong with your plan until you try and carry out the plan, which is why it's super important to only risk money in demo accounts with fake money, especially when you're starting out and you're not too confident about what you're doing. Okay, you don't want real money on the line when you could make execution errors, or you just don't understand fully what you're doing. So that's it. And a failure to plan is planning to fail, right? Benjamin Franklin. That's great. And when you don't plan, what happens? What happens when you don't plan? Well, you become part of somebody else's plan, right? And you end up unsatisfied and unhappy. Maybe not, but it really depends on the people that you're surrounding yourself with, I guess, when you become part of their plans. But yeah, I would rather just make my own plans and be the captain of my own ship, right? So the big idea here is change the plan until it works for you. That is the big idea of this lesson. That's what I'm going to hang my hat on, is the big idea. And that brings us to the last section of this lesson here. Congratulations for making it all the way through. The bonus plans available in the resources section are the Forex trade plan, which may be a little foreign to you if you're not into foreign currencies trading. But if you are, then who knows? It might be right up your alley. And then the crypto trade plan is a work in progress, but I put it up there just to give you some ideas on what a crypto trade plan might look like I'm not an expert in crypto or anything, but I did make a simple trade plan off it. So those are the bonus plans. And to recap, we covered the simple trade plan, the document intro, and we covered the 6 essential parts to a solid trade plan, right? And they are all available in that simple trade plan document. So no need to go back and relook at the slides. They're all in the simple trade plan document for when you do this action item next. And we also covered what to do when the plan isn't working, right? Make a new plan. That was the big idea. And then some bonus plans are given to you in the resource section. So the action item here is to create your trade plan from the resource document and save it on an accessible drive or the cloud so you can access it from anywhere and you don't lose it forever, right? Oh, that's the worst when you put all this work into something and you don't save it on a drive or on the cloud and it's lost forever. Oh, you'll never get that time back. There's only 2 things that you never get back: words after they're spoken and time after it's lost, right? So that's it for creating a trade plan. Thanks for sticking with me for this entire lesson. I will see you in the next lesson.